Hello guys, a very good day to you all. My name is Pragya and today we will be covering the banking and financial awareness of the upcoming exam that has been provided by Indian Bank for the post of LBO. What is LBO? You can see from here also it's written as the local bank officer. Clear? So friends, as this is going to be our fifth class of the day and our whole sessions are of 30-minute approach. If in case anyone is intended or intentionally wanting to consider the classes, then the team of Knowledgist is going to be providing a complete batch for you all. In that particular batch, you will be getting live classes, mock tests, and recordings as well, in case you miss any of the live classes. So if you want to join the continuous batch, that is in the continuation backwards, you can check out the description box of our channel Knowledgist. So yeah, coming to the very first question of the day, without wasting much time, what we'll be covering today? We will be covering the banking and finance portion, okay, in the form of multiple choice questions. So yeah, let's dig into it. Come to the very first question. See, today's session, if you guys have gone through the previous session of ours, then you must definitely be remembering what we were doing in the previous session. We were talking about the India and Ghana local currency settlement systems, a whole summit which took place in between India and Ghana. Okay, and there at that time our class got ended, our session was ended. So now onwards we will be starting it from there also. This particular question, first question of the day, is another segment of that question, of the previous question which we covered in our previous session. So do go and check it out. You will be getting it in the channel of ours, that is Knowledgist. So now question is asking, if we consider or considering the discussions on a local currency settlement system which are going in between India and Ghana, so what could be a potential outcome of such an implementation? See, let's give you a quick review. India and Ghana, they both recently agreed to link their payment systems, okay? What was the topic on which India and Ghana recently gathered and agreed particularly? They both agreed to link their payment systems to enable instant fund transfers. See, nowadays, in this era of such fast and technological approaches, Ghana also wants to undergo or enable its consumers or the customers to provide instant fund transfers, okay, for its users particularly in both the countries. So that's the reason why this whole thing took place. Local currency settlement system went through or took place in between India and Ghana. So there were three topics majorly. First was the use of unified payment interface, which is UPI. So India's UPI will now be linked to Ghana's Ghana Interbank Payment and Settlement System, which we in short call as GIPS. And second is the time frame. The two countries also agreed to operationalize this link within the next 6 months, which in the upcoming 6 months. And where did this meeting took place? This whole decision was made during the fourth session of the India-Ghana Joint Trade Committee, that is JTC, in Accra, Ghana. Clear? So this was a quick bit of what happened in between India and Ghana, if anyone is not having any kind of idea. So coming back to the question, we have to tell the discussions on a local currency settlement system between India and Ghana. What could be a potential outcome of such an implementation? Whether it led to decrease in the bilateral trade due to complex currency regulations, reduction in trade barriers and cost savings on currency exchange, increased reliance on third-party countries for trade settlements, or it led to complete phase out of the local currency in favor of a unified digital currency. So what is the reason? What did it bring in the frame for both India and Ghana? Yes, a very beautiful evening to you, Grish. Anyone wants to answer this question? Or being the very first question of our session, it's ma'am's turn to answer. Anyone? I'll definitely be waiting for a few seconds to you guys to reply. Here we are talking about the discussions regarding the local currency settlement system between India and Ghana and what is considered as a potential outcome of such a whole new implementation. So, Harshraj is saying option B is correct. Okay, let's check it out. Correct option. Yes, you are correct, Harshraj. Girish, it's option B, my dear friends. That is reduction in the trade barriers and cost savings on currency exchange. So what did it lead? It led to further reduction in trade barriers and cost savings on currency exchange. So in all, a local currency settlement system between India and Ghana, it took place. We all came to know about it. Okay. And it also had the power to reduce dependency on any third party currencies, like the dependencies on the United States dollar for further trade settlements. Okay, thereby it had lowered the cost and trade barriers for both the countries, whether we are talking about India or if we are talking about Ghana particularly. Now, do you know who is currently the president of Ghana? Anyone wants? Is there anyone who knows it? Who is the current president of Ghana? Anyone wants to answer this? Current president of Ghana. I would love to get answers from you. Okay. So yeah, the current president of Ghana, his name is quite long, lengthy, but yeah, we will have to remember. It's Nana. Remember it by this term, Nana. It's Nana Addo Dankwa Akufo-Addo. Clear? So this Addo, it's being repeated again and again. And the currency of Ghana, it's Ghanaian cedi. English, see, there are a number of, you can say, religion-based or cultural-based languages which are being spoken in Ghana. But English is the only official language that is being used as a single form or on a wider or broader level. So it's the official language of Ghana also. What is it? It is English language. Clear? Yes, Harshraj is correct. Harshraj answered it that the president is Nana Addo. Very good, dear. Now, moving to the next question, I hope this was clear to you guys. There is no kind of technical issues. And so, next question is asking, what has the RBI advised the fintech companies, the financial and technological based companies, which are on a submerged level called as fintech companies, specializing in lending to target as their new annual growth rate. So, what is the new supposed advised prescribed new annual growth rate of the fintech companies which are quite specialized in the lending sector through RBI, whether it's 5 to 10%, 15 to 20%, 25 to 30%, or 35 to 40%. What according to you is the correct answer? What is it? What is it, my dear friends? Anyone knows? Amit Kumar is saying B. Okay. That is 15 to 20%. Anyone else? See, be quick to answer. I just complete the whole question and no one is answering. That's not good to know. Okay, very good. Girish is saying option C. Sohan is saying option C. Let's check what is it. It is option B, my friends. Okay. So Sandeep Mishra, it's option B. That is 15 to 20%. The range is advised by RBI for the fintech companies who are specialized in lending to target a range of 15 to 20% as per their new annual growth rate. Okay. Now, see why this particular range of 15 to 20% has been provided or advised by RBI, because it is to aim to control the rapid expansion and ensure further financial stability. That's the main reason. Next question is asking, the alternative financial models are Fintech companies considering following the RBI's new growth directive. See, RBI has provided a whole new directive, which is the basic work of RBI. It keeps on providing directives, monetizing and all. I don't know why. But yeah, we have to tell the alternative financing model, which the fintech companies are now considering and has been definitely provided by RBI's new growth directive. Whether it's option A, that is only unsecured personal loans, predominantly high risk investments, gold loans, and loans against property or exclusive venture capital funding. What is it? Girish is asking, is RBI focusing on lending nowadays? See, RBI's work is to, keep things in work in a legal manner and regulate the things. So it's not particularly that RBI is nowadays focusing on the fintech companies or anything that is related to lending only. Because if you have gone through the previous news also, then it keeps on, providing regulation acts or regulation guidelines, considering new things regarding banks also. So it's not like that RBI is just focusing on the lending sector or the fintech companies which are working in this sector. It's not so. So Girish is saying option C. Amit is also saying option C. Amit Kumar is saying moderate. Okay. So yeah, the correct option, my friends, this time it's option C. You are correct. That is gold loans and loans against property. So we all know what is this term, that is gold loan. Second term is here, that is loans against property. See, it is simple, but let me explain it once. Loans against property, that is LAP, it is a secured loan that is sectioned against the asset, which is pledged as a collateral. Okay, and this asset can either be an owned land, a house, or any other commercial premises. And when is this asset being collateral now? This asset remains as a collateral with the lender until the entire loan against property amount is repaid. Simple as that, nothing new. So the correct option is option C, that is in response to the RBI's call for moderate growth. Some fintechs are exploring secured lending options like the option of gold loans, loans against property as viable alternatives to maintain further growth and to adapt regulatory pressures. Okay, now next question is asking, if you talk about the March month of 2024, what was the growth rate of the scheduled commercial banks CRE portfolio compared to the previous year? We just have to compare the growth rate of the SCBs, that are the scheduled commercial banks CRE portfolio, which is if it is compared to the previous year. That there the growth rate is of 5.5%, 8.52%, 15%, 22.94%. See, basically, what is this term? CRE portfolio. CRE portfolio is focused on basically on the income generating properties and the real estate assets. Okay, instead of the residential properties. So anyone wants to answer this? Anyone wants to answer this? And CRE, it's commercial real estate. Commercial real estate. Name, within its name, it's carrying this word real estate. Okay, so it's not regarding or relating to the income generating properties or the real assets only, but it don't revolve around the residential properties in itself within. Clear? So it's a broader term. Now, how many have answered? Let me have a look once. No one? No, a number of you have answered. So Girish is saying option D, Rajshekhar is saying option B, Sohan option B. Let's check what is it. The correct option this time, my friends, it is option D. That is 22.94%. So if we talk about the March month 2024, what was the growth rate? Growth rate was of 22.94% of the SCB's CRE portfolio if it is being compared to the previous year's portfolio. So CRE portfolio of SCB Bank witnessed a significant growth of 22.94% on an year-on-year basis. as of March 2024. What does it show? It marks a robust increase from the previous year's growth rate. Certainly. Clear? So yes, Amit Kumar was also saying that the correct option is option D. Next question is asking which of the following factors has not been credited with supporting the growth in bank CRE lending? Which of the following factor is not related, associated, credited, submerged with the supporting part of growth in banks CRE lending? Whether it is the advent of real estate investment trust, introduction of stricter gambling regulations, implementation of the real estate regulatory authority, deleveraging by listed developers. What is it? Which of the factors is having no application regarding the growth in the bank's CRE lending? What is it? Whether it is option A, B, C, or D. So Girish is saying option B is correct. Okay. Anyone else? Anyone else, my dear friends? I'll be waiting. No issues. Take your time. Rajshekhar is saying option B. Great. So yeah, the correct option of this one is option B. Clear? Which means that introduction of stricter gambling regulations has nothing to do with the credit sanctional part, or it has not been credited with supporting the growth in banks CRE lending. So Sohan, my dear, it's option B. The correct option this time is option B. That is, the growth in bank CRE lending has been supported by factors like the REITs, RERA, and deleveraging by developers. Stricter gambling regulations are, unrelated to this context. So yeah, that's all about this question. Next question is asking what is the forecasted incremental credit flow from domestic sources for the Indian economy in the financial year 2025 according to ICRA. If we go through the ICRA's new report, ICRA, what is it? It is the investment information and credit rating agency. Yeah. So what is ICRA? It stands for Investment Information and Credit Rating Agency. See, basically, friends, it is an independent credit rating agency and it do invest in information company in India. Clear? It was founded in the year of 1991 by financial institutions and banks as a joint venture with Moody's. Who is the, firstly, just skip this question. Tell me, who is the current chairman of ICRA? What is the name of the current chairman of ICRA? Anyone? Praful, Girish, Amit Kumar, Sohan? Anyone? Anyone knows the name of the current chairman of ICRA? See, ma'am won't be, just speeding up and going to next and next and next question. I want you guys to reply. So kindly reply, who is the current chairman of ICRA? As soon as you will be replying, as much questions we will be covering. Simple as that. This is how these sessions roll. It's a mutual work, not a one-sided love. Okay. So what is it? Who is the current chairman of ICRA? Yes, very good. Rajshekhar is saying his name is Arun Duggal. So Mr. Arun Duggal is the current chairman of ICRA and the headquarters are in Gurugram, my friends. So now let us come back to our question. It was asking the forecasted incremental credit flow from domestic sources for the Indian economy in the FY 2025 according to ICRA. Whether these are all in rupees, whether it's rupees 22.3 lakh, 24.5, 25.4, 10.6, what is it? Okay, Ilyas is also saying Arun. Good. Amit is saying option A. Praful maybe answered option C for this question. So yeah, the correct option this time is option B, my friends. That is rupees 24.5 lakh crore, which means ICRA forecasts a moderation in the incremental credit flow reached to rupees 24.5 lakh crore in the FY 2025. Clear? It is down from the previous year's record high. Yes, Ilyas, you were also saying correctly. It is option B. Your answer popped up just now. So don't think that ma'am don't address the correct answer. It's not like that. It's the case that it just popped up. Sandeep, Praful, both were also correct with the option B. Next question is asking what is expected to influence the competitiveness of funding from debt capital markets in the FY 2025 as per ICRA. In its new report provided by ICRA, it also gave us an additional information regarding the expected influence of the competitiveness of funding from debt capital markets in the financial year 2025. Whether it has seen decrease in demand for corporate bonds, increase in the foreign portfolio flows, and stable yield on Indian government banks, regulatory constraints on NBFCs, or reduction in non-food bank credit. What has it gone through? Whether option A, that is the decrease in demand for corporate bonds, increase in foreign portfolio flows, stable yield on IGBs, regulatory constraints on NBFCs. What is it? Girish is saying option B. Anyone else? Is there anyone who knows the correct answer? What is it? Just one more answer and ma'am will be displaying the correct answer. Anyone? Yeah, so Praful is also saying option B. That is the correct option. Yes, it's option B, my friends. That is increase in foreign portfolio flows and stable yield on Indian government bonds. So the expected influence of the competitiveness of funding from debt capital markets in the FY 2025 leads to increase in foreign portfolio flows and stable yield on Indian government bonds. And this competitiveness of funding from debt capital markets is expected to be influenced positively in the FY 2025 due to the stable yields on Indian government bonds and increased demands from foreign portfolio flows. What does it provide us as an output? It just makes it an attractive option for large corporates. Clear? Now, please tell me, is this much thing clear to you? Then we will be coming to the next question. Okay, so one of my friends is asking, what is non-food bank credit? So, dear Grish, non-food bank credit, let me remove it. Yeah. Here is a term you all can see. Come to option D. That is reduction in non-food bank credit. See, non-food bank credit is credit given by the SCBs, that are the scheduled commercial banks, to sectors which are other than food. It by its name also it's showing that non-food bank other than food. Okay. So it is the loan, okay, the credit which is given by the SCBs to sectors other than food, like agriculture, industry, services, and personal loans. And RBI also complies data on this non-food bank credit. It basically shows, what does this non-food bank credit show? It acts as an indicator of India's economic growth. So a number of things have been changed by RBI regarding this thing, which is non-food bank credit. And it is the credit that includes agriculture, industry, services, and personal loans. That's it. Okay. I guess it's clear to you guys. Is it clear or not, Girish? Credit which is provided other than the food. No food related sector on a primary basis is indulged. Anyone? Girish, is it clear? Okay. So now coming to the next question, it's asking who has been approved by RBI as the new MD and CEO of Ujjivan Small Finance Bank. Whether his name is Itira Davis, Sanjeev Nautiyal, Banavar, Anant Rimai, Prabhakar, none of the above. What is the correct option? According to my dear ones, what is it? Okay, understood. That's good, Girish. Answer this question, my friends. Who has been approved by RBI? RBI's approval, it's not easy to get. So, who has been approved? Anyone? Okay, Girish is saying option D. That is, option B is the correct answer. Sanjeev Nautiyal. Just remember his name by Jubin Nautiyal's name. Jubin Nautiyal, Sanjeev Nautiyal, RBI has approved Jubin Nautiyal's brother Sanjeev Nautiyal as the new MD and CEO of Ujjivan Small Finance Bank. Ilyas is saying correct. That is option B. And it came into effect. This decision has already come into effect from July 1, 1st of July 2024. Next question is asking, what position has Dr. Deepak Kumar been appointed to recently? Dr. Deepak Kumar has been appointed to which position? Whether it is the position of Chief Information Security Officer, Governor of RBI, Director of IDRBT, or Head of IT Department at RBI. What is the correct and exact position? Answer me. Okay, anyone? Anyone wants to answer? Amit, Sohan, you are saying option B for this question, or is this answer of yours relevant to previous one? Praful is saying A. Okay, so the correct option this time it's option C, my friends. Yes, Ravindra Nayak, you are correct. It's option C. That he has now been appointed as the director of IDRBT. Now comes the thing, what is this IDRBT? It is the Institute for Development and Research in Banking Technology, IDRBT, and it reflects his significant contributions and expertise in the banking technology. This institute, IDRBT, it was being founded in the year 1996, and headquarters are, where are the headquarters? Headquarters are in Hyderabad, that is Telangana. So yeah, now moving to the next question of ours. It is asking, what is the primary objective of the partnership between NIPL and Bank of Namibia? If you have gone through news, then a new partnership has, okay, so a new partnership has taken place in between NIPL and the Bank of Namibia. What is the primary objective of this one, of this new partnership? Whether it is to reduce banking fraud, to establish real-time transaction capabilities, to increase interest rates, or to promote tourism. What is it? What is the primary objective of this new partnership? The partnership between NIPL and the Bank of Namibia. See, NIPL signed an agreement with the Bank of Namibia to create, what is the purpose? Let me tell this one to you guys. To create a real-time instant payment system which is similar to India's UPI. The UPI, Unified Payments Interface, that is being used in India. It will be similar to India's Unified Payments Interface only. So this was the basic reason you can say for, or the basic or primary objective. Secondly, this new partnership will facilitate faster P2M and P2P transactions, person to person and person to merchant transactions, which will, what will it use be? It will promote financial inclusion from underserved populations. Clear? So, yeah, if we talk about NIPL particularly, then it was established on 3rd of April 2020 as NPCI's fully owned subsidiary. And what is the work of NIPL? NIPL's work is to focus on internationalizing the RuPay card scheme and UPI mobile payment solutions. Second name is of Namibia. So, what is the correct answer according to you guys? I have told you this much information. You guys must have gone through the question. What is the correct answer? Anyone? Anyone wants to tell me? See, the current Prime Minister, if you are not answering me, I'll be waiting. I'll be completing few more additional things. The current Prime Minister of Namibia's name is Sarah Kugon Gilva. Sarah, okay? Kugon Gilva. And she is a Namibian politician. She has been serving from 2015. So I guess few of you have answered. Maybe let me check. No one is still. Why is it so? Okay. No issues. Amit is saying option B. Sandeep is saying option B. Okay. So the correct option this time, my friends, is option B. The primary objective of the partnership which took place in between NIPL and the Bank of Namibia is to establish real-time transactions capabilities. I by myself tell this thing to you guys. One of my friends asked me what is the full form of NIPL. NIPL's full form is NPCI International Payments Limited. Clear? And what is the full form of NPCI? Here comes the question. NPCI stands for National Payments Corporation of India. National Payments Corporation of India. And it is basically an umbrella organization that operates retail payments and settlement systems in India. That's it for this question. Now we will be coming to the next one. Next question is asking, what is the projected credit to deposit ratio for banks in the FY25 according to CARE Edge ratings? If you talk about the new projected credit to deposit ratio for banks in the FY25, which is being provided or according to the CARE Edge ratings, what is it? Whether it should be under 75%, whether it is exactly 80%, over 81%, or over 90%. Girish? Dear, I answered it. I did answer it. NIPL, you asked for NIPL's full form. I told you NIPL's full form. See, I'll be repeating it. No issues regarding it. So, NIPL. Okay, you got it. That's good. Now, what is the correct answer? Sandeep is saying B. Girish is saying A. So the correct option is option C. That is over 81%. CARE Edge ratings, it forecasts that the credit to deposit ratio of banks will remain over 81% in the financial year 25 due to continuing robust credit growth, which is compared to deposit growth. Okay. So Praful, the correct answer is option C this time. Rohit is saying option B. My dear friend, it's option C. So that's it for today's session. This was the last question of ours. And in the tomorrow session of ours, we will be continuing from the next question. And I guess everyone is getting the session properly, getting the things properly. And if there is any kind of issue, any hindrance, anything you want to tell us, you can go through our comment section, pop up with a new comment. We will definitely be entertaining your comment if you are having any issues. And do like, share, subscribe our channel and the videos. So yeah, we'll be meeting tomorrow with same person, same time, same place. That is the platform of Knowledgist. Thank you everyone. Signing off, Pragya this side. Bye.